So today is Sunday, 12th of June. Let us evaluate the global sector, Indian sectors, and the stocks. Before that, the disclaimer that we are not a SEBI registered advisor. Please consult your financial advisor before taking any decisions on buying and selling of shares or any investment decisions. We are not liable for any gains or losses made by you. The objective of this course is to spread financial literacy. This is the status of Nifty as on Friday. So we can see that the Nifty has come down. This is the day chart. Is moving around this area. It went up to 16,600 levels. And once again, it is at 16,201 levels. If you see on the trading view, here is the trading view of the Nifty. This was the box we had drawn, and we would have appreciated if it was moved in this area. But what we are seeing is, in the last 2 or 3 days, the market is moving down. It has come down to 16,201 levels. So, coming this week, because of the CPI data from US, which is already gone to 8.7% inflation levels. So the market is little worrisome, sentiments are bad. So there is a good expectation that this will come down further. It will come down to this levels of 16,000. There is a support at this level. Okay, this is a support zone, which in the case of traders, they are also called as demand zone or buy zone. So this zone is quite a big zone because this is a basing candle base. So from 16,000 levels till this level, 15.7, 15.5, the market can go down. Now, yesterday, there was some report in Money Control and then something in ET also, that the Fed may this time may limit their increase in interest rate on June 15 up to say 50 BPS. But it is very much possible that they may increase in the next subsequent one by 75 BPS. The reason is the inflation levels are going up and up in US, and US normally doesn't have an inflation above 5 or 6, maximum 2, 3, 4. So they are not like India where we are used to 5%, 6%. Currently, it is more than that. So we are expecting more inflation, but they cannot take that inflation level so high because there is a midterm election which is going to happen, okay, in November. So sometime then before that, they have to start controlling. So they have a worry, okay, that this year if they don't control during the midterm election time, the things will spiral up. So they are in a hurry also to control the inflation. So if you see this chart, the red line is my 200 DMA, the green line is my 50 DMA, and the blue one is my 21 DMA. So 21 DMA tells me that the prices have just fallen below now. So last 1 month back, we were at the similar price somewhere here, and we are coming back to the same similar position. This is the 21-day simple moving average. So we are going below that. The red candle tells me that. In case of the 50-day, about a quarter or so, we are very much below. The price is very much below the 50-day simple moving average. And when we compare with the last year, approximately 200 days moving average, we are way below. So what we see from this point of onwards, the markets have started coming down. So sometime in April, it was at 17,000 levels. It has gone down by 1,500 points, nearly 8%, 7-8%. And what I was reading and referring by Mr. Jeffries Christopher Wood. So he mentioned that he would like to enter India around 14,500 levels, between 14,000 and 14,500. Yesterday, Warren Buffett's statement is also there. The markets will fall by around 50%. It is not very alarming statement because the American markets are already fallen by 35%, 30-35. So Nasdaq is much more than that. So what we see is that if Americans are saying that it is falling by around 40%, 50%, they are near about that only, already, the Dow Jones and all the major indexes. So it's not that it is not going to happen. It has already more or less happened. The individual stocks also, especially the IT stocks, they have fallen drastically. You can see on this ADX chart also, this is the middle line, which is around 25. The blue line, which is the strength, is showing down. The green line, which is supposed to be the bull, the one which is uptrending, it is telling me it is down. And the red one, which is bearish, it is up. What does it mean? That the trend is going to be further downwards. On the RSI front also, it is telling me the same. It is below 50. The blue line is going down. So on the whole, the technical indicators, if you see Bollinger Band and all others, all are telling me the Nifty is going to go down. Okay. So where it can go down, it can come down to this levels. So touching this 16,000 is a very good possibility in next few days time. Touching 16,000 levels is a very good possibility, and it can come down further to 15,700, 800 levels. Okay. There will be in between some that can happen, but overall, the Nifty is showing that it can move upwards. Just 1 minute. Okay. So last week it was here. This week it is over here. So currently the market is sell on rise. The current market levels are 16,201. I am not sure whether it will go up this week, but little bit, but it is having a lot of resistance at 16,800 levels. And climbing up 600 levels this week is not very possible. So probability is not very high. Okay. Support levels going down is 16,000 level. That is very high. The market range will be between 16,000 to 16,800. It may go to 15,800, 900 also. In the last 5 days, only one day it was quite good, Thursday, whereas the other days, the market was very weak. The market was very weak. The global market condition is also like that. In fact, US markets were in a fall, a steep fall. We'll see that. RBI announced the repo rate increase by 50 BPS. Now the repo rate is around 4.90%. US is going to announce the inflation data year on year is 8.6%, which is very, very high. In last 4 decades, it is one of the highest. Europe increased the interest rate by 25 BPS. They are a little slow on that. The export market is supposed to be like one day up, next day down. Volatility levels are quite up. It will keep on moving like that. Okay. The volatility index is also around 2021. GDP growth forecast is around 7.2%. Not so high. Will the market come back to the normalcy levels? Let's see. Can we change any of these factors? Inflation, not possible. Inflation is increasing in India and in the world markets. Currently, what we are seeing is that it is not even steadying, it is still increasing. Interest rate hikes, that will happen throughout the year also. Coming Wednesday, the US Fed is going to increase the rates. They have a meeting on Monday, Tuesday. Wednesday, they will declare it. Liquidity crunching will happen. US is likely to reduce the balance sheet. This time, RBI has not increased the CRR. So if they increase the CRR, definitely India will also see further crunching of the liquidity. The war situation is persisting. The world economy is worried as more time is going to be getting spent on the war, and already 3 months pass. We can have a problem. Inflation, price, commodities, supply chain problems, these are going to increase. The NATO is trying to control the Russian oil prices, which can become another problem. Russia has yesterday in the Baltic Sea has launched some 60 big ships.
13.
So these kind of problems are increasing one by one. So we don't see any major change in the scenarios. Crude oil prices are going up. 118, 117 last week. It has become 120, 121 this week. It is going to stabilize around 120. That is a problem for India. Indian balance sheet will become a problem because we had expected 70, 80 as the average crude price for the whole year. And now it is going to be around 120. So timelines point of view, minimum one more quarter, say October, or if 2 quarters by December, we should see a little better position because these 5 factors are very important. Unless and until these 5 factors are not taken care of, we are not likely to see any positive change in the markets. And one factor which I have not mentioned here is the FII should stop withdrawing. At least if they stop withdrawing, that is good. Instead of adding, currently we don't see any adding which is happening, but the withdrawal from FII should at least reduce. Like every day, if they are going to withdraw 3,000 plus crores, definitely the markets are getting affected. So this is the level somewhere down over here. If the things are going to be a little better, we should look at entry at these levels. Little down also, 14,800 levels. Now, if I am saying 15,000 or 15,500 from 16,200, it is a matter of now only say 1,200 points. So this is possible. It is not that it is not possible. Okay. So if you're having some cash with you, hold on, be patient. Don't get into any kind of FOMO, kind of missing out kind of thinking कि मैं अभी इन्वेस्ट नहीं करूंगा तो मेरे हाथ से निकल जाएगा. नहीं, ऐसा नहीं है. काफी टाइम मिलेगा. The market is not seeing any V-shaped recovery fast. Okay, not when the COVID period thing happened. We had a very V-shaped recovery. In the 3 months time, things started changing. Now we are already 8 months. So the correction is not only price wise, but it is also time wise. Since last October, that means 8 months have already passed, and we are already seeing a time correction also. So if I say that by December or December 22 or March 23, that is our fiscal year ending, I don't expect in Nifty. My earlier prediction was Nifty will be around 9 to 12%. But just now I'm little worried. It can be around 8-9% increase this time. So don't think that I'll remove my money from the equity, take a loss and shift to FDs. Don't do all those things because it is not going to help. It will become a more of a problem later because you will not be able to enter later on. See, this time corrections also happen once in 3-4 years. And that is a part of the market. So when you are looking for a long-term investment, don't look at all those small things. This week, what sectors performed? Practically every sector was negative. And whichever the green ones were, Nifty, oil and gas, energy, and public sector at present. We can have a look over here also. Yesterday, this was not working. Today, luckily, it is working. But it is giving some problem here. See here. This is from the Tate Tiger. It is a very good software. I use them very regularly. This is my yearly comparison. So now yearly Nifty is 5.39 plus. And these are the sectors which were above Nifty. And these are the sectors which were below Nifty. You can see FMCG is 5.2. Consumer durable 3.87. MNCs, commodities, mid caps, all are down. Pharma, private banks. Sectors which are up, PSEs, energy, realty, media, IT. IT has taken a beating. My worry is that if the war prolongs for a longer period of time, the inflation levels will increase further. And the possibility is the reduction in the budgets of the foreign companies on the IT spend. So when that happens, the IT will get affected. But there is one more, that is the headwind for the IT. One tailwind for the IT is the rupee going down. The USD INR is now nearly at 78, 77.8 or something like that. So it is going to go up further. The US dollar index has also moved up from 100 levels, 101 levels, it has moved to 103 levels. So that is increasing once again. So more or less, this IT can be in a bad shape for some period of time. No doubt the whole companies are doing well, but the overall business sentiments will get affected. So even if you are holding it, nothing wrong. I am holding it. I am not selling it off on a loss or anything like that. The reason why it is, there is nothing wrong the companies have done. The company's balance sheets are good. If the sentiments will change, everything else will come back immediately to the normalcy levels. The two sectors which can do very well immediately can be your banking sector and IT sector. I'm not very comfortable on the pharma because I have seen so many times pharma which is very much related to the American US FDA, whether they approve, they disapprove. All the time this keeps on happening. And all those pharma companies, lab-based companies, which are Indian companies, Indian market-based companies, you can see your pharma is down by minus 2.5% in 1 month period. So when you see the pharma is dependent on the American approvals and disapprovals, many a times, even though the company was doing so well, like this week, Davis Lab went into trouble. Earlier, Dr. Reddy was in trouble. Sometime back, Cipla and Sun Pharma went down. So you cannot define how long they will be enjoying the approvals and how long they can suddenly get disapproved for some reason, some observation, some technical problems. So in 1 month, the markets have gone just up by 1%. So in a year's time, we saw it was up by only 5%. In 1 week, only these are the sectors which I mentioned: oil and gas, energy, PSEs. The IT is down minus 1%. Healthcare minus 1.5. Pharma minus 2.8. Auto minus 0.63. Nifty overall minus 0.9. So what we are seeing is this sector wise, it's not looking nice. The oil and gas and energy is going up because the current crude oil prices are going up, refinery margins are increasing. that MRL director, CDA, MD, what he mentioned that every 1% increase in the GMR in the Singapore rates, he is having a benefit of 700, 800 crore rupees on the yearly balance sheet. Now we consider this. Most of the oil companies are benefiting just now. Oil India, Gas, GL. These are the stocks which I had mentioned about a month back. Now I feel that possibility is there that some kind of, there is a rumors are there. I'm not very sure about it, but some subsidies can be borne by these oil and gas companies because they are making some profits because the government needs some money. So if that happens or some windfall tax gains happens, suddenly you'll find these stocks exiting. So I have exited oil and gas last Friday. The reason is, and now I have also booked an order which is much lower. The reason why I'm doing is I want to book profits. Similarly, GAIL, currently I am having a very minor positive, so I have not exited. But I would exit these stocks because you never know, suddenly the government, because they are in need of money, they can immediately put some kind of restrictions on these PSU companies and they will find their margins going down, profits going down, and the stocks will also get into trouble. So that is my thinking. It can vary from people to people. Take your own decision. Okay. So I am seeing that the things are not very proper at this point of time. Let us see the stocks. The Dow Jones Index, you can see Wednesday, Thursday, Friday. Great fall. Parameters saying it is negative. S&P fall. You can see 21, 50, 200 all down. Nasdaq has fallen the worst, more than 40%. Dollar index is increasing from 101 levels. At this levels, 101, 102, it has gone up now to 104. UK markets, little better from the 21 and 50-day and the 200-day moving average point of view, slightly better than the others. German index, very bad, definitely bad. French, it is bad. Japanese, better. You can see here 21 and 50 are below the price. So, and they are just touching the 200-day moving average. So the Japanese stock exchange is in a better position. Hang Seng, Hong Kong is bad. The Chinese composite index is little better here, but 200 may near come. KOSPI down. Crude oil. Oil is continuously increasing. We want somewhere to be around 80, 90 for betterment of Indian economy. Otherwise, we'll have to find out the ways in which we have to get them in. The Russian oil is, they are likely to get it, but there are barriers which are there. US is putting some kind of problem for us if we buy in bigger quantity. Then the Brent crude oil is also increasing. Gold has increased once again this week. Bitcoins are going down. You can see continuously down. There are various people who are looking for Bitcoin, but I for one feel that currently they are dangerous. Till the time there is some ruling and regulation, we cannot go for something which can be dangerous and we can lose the money. USD INR is actually now 78.09. Last week it was around 77.8182. Friday it closed to 78.09. You can see we are already on the 78. So this is the advantage the IT companies and the exporters will get, but not the other companies. The importers will be in trouble. Emerging market index is showing that it is going down. 200 से तो down है, 50 से भी down हुआ, near about touching the 20 EMA. This is the Nifty we saw already. Okay. Sensex is similarly placed. Okay. Nifty next 50. Now let us see the main ones. Bank Nifty. Bank Nifty reached 35,000 levels. It was a nice sign, but last 10 days it is continuously getting hammered. Okay, and it is now touching the 21-day moving average. So when I compare this with Nifty, you can see Nifty is also touching the 21-day moving average, and Bank Nifty is also touching the 21-day moving average. Here it is. So a parallel movement is happening, indicating that if the markets have to go up, the banks have to move up. But currently it is not happening. Nifty mid caps are falling. Small caps are also falling. This is a small cap index, mid and small. This is only the small cap, continuously falling. This is only the mid cap, falling continuously. India VX is increasing once again back to the 1920 levels. Around 1718 would have been a good point, but currently it is at 1920 levels. So it is slightly above. The higher the volatility, see the inverse relationship is there. So if VX is increasing, the markets will go down and vice versa. The PSU banks, little better on the 21-day moving average. Okay. Private banks are little bad comparatively. You can see here. IT is unfortunately not doing very well. It is falling down because the sentiments are there. Please believe me, the IT companies are not doing badly. It may happen that they may not get 15-20% returns, but they will get definitely 10-12% returns. And 10-12% returns in this kind of a market is still better. Okay. Even better than 7% of your FDs. Metals. Now the question is, what should we do with the metals? I am going to keep only 3 stocks. Okay. That is Tata Steel, Hindalco, and National Aluminium. Vedanta I am trying to remove, but I am not able to remove at a better price. So I will wait for a better price till I get a proper. But there is a possibility that Vedanta will do little better because of the Hindustan Zinc buying and all those things which are likely to happen. Okay, they are already making provisions for that. Media, I am not so keen on it because I believe that in current scenario, many of the companies, except the streaming ones, all others will be into trouble. Energy is going up because of the crude oil, but it is more or less at the level, same levels. Oil, once again, moving up because of the crude oil. FMCG companies, the problem is because of the margins are reducing, competition is high. Almost every company is manufacturing similar kind of products. So most of the FMCGs will be taking a beating. Only 1 or 2 of them I see which can be changing once. One of them is ITC, which is doing well. They may go for some demerger during the year. If they don't do it, they will have problem. Okay, like Reliance, they have to do something. Both Reliance and ITC, they have to go for some demerger, and then the valuations will take a big rise. There will be a big increase. Auto companies have started moving up, especially the 4-wheelers compared to the 2-wheelers. They are down since a long time, so they have started moving up. But I'm not very sure how long the auto companies will be able to move up till the time the pent-up demand is there, because when the interest rates will increase, the real estate and the auto companies will have a problem because financing problems will happen. Many people will not be able to go for the big loans unless there is some kind of adjustment which is done by subvention schemes or something like that. Pharma companies are not doing so well. In fact, I am trying to reduce my pharma holdings, and I've already done many companies. So whenever I'm getting some benefit out of a pharma company, except the hospital company stocks, I believe you should reduce your holding, because even in this kind of a scenario where the fourth wave is likely to happen or not likely to happen, we are finding that the pharma stocks are not getting picked up at all. Realty is, as we can see, it is going down. Infra, another point from infra point of view and related to capex cement companies, just understand this, that because of the good kind of money reduction earnings from the government point of view, because of the reduction of the oil and gas, petrol and diesel excise duty, the government may not have that much funds for going for capex expenditure. So in order to make the budget proper and less deficit, they may go for reduced capex expenditure. So that is a possibility. So infra spending may not happen, and because of which the cement companies will also have some kind of a problem. So what we are seeing is oil companies like paint-based companies, Asian Paints and all, they are having trouble. The trouble is because of the increase in the oil prices. The paint companies, they are having competition themselves. The competition is increasing because more companies are coming into paints, like JSW paints have now been launched. Similarly in cement, because Adani coming in, Ultrachem and Grasim, they are declared that they are going to spend some 10,000 crores capex on cement. So all this is going to increase the competition, and the small cement companies will get affected. So if you're having the big ones, you can hold it, but the small ones, APCL, Heidelberg Cement, JK Lakshmi Cement, try to reduce the holdings, because you don't know how long this problem will continue. Commodities is going down, so avoid. Consumption, the consumer durable companies also down. So any major company you would like me to see? Any major company you would like me to see? Let us see some of them. Mindtree just started moving little up, about the 21-day moving average. LTI just moving about the 21-day moving. LTTS slightly below. TCS doing better. Infi better. Tech Mahindra down. HCL Tech down. Wipro down. Naukri down. Tata Steel. Last year, Tata Steel was at 700. This year, it is at 1,000. So even if you don't consider the very highs and the lows, still the stock has given you a good return. It is fundamentally very good stock. So it depends on your thinking, what way you want to. If you're looking at making profits, then you can exit from that. Okay. If you are looking at long-term returns, you can definitely continue with that. Hindalco, very much down. National Aluminium, Titan, this is a good stock to hold. Reliance, doing much better. But I'm seeing some de-ratings from various kind of people. So I would say that I'm going to hold this. And if it goes to 2.6 levels or something, you can add it as you wish. If you want to add at the lower levels, there is a demand zone over here, 2682 levels. So you can add later if you want to. IRCT is a monopoly kind of company. Currently down, but long-term point of view, it will be good. Deepak Nitrite currently in trouble because of the accident which has taken place. So even if you are getting at low levels, I will avoid till the time there is a confirmation that the plant will once again start, the Vadodara plant. Till that time, you can wait for the no more investments in this stock. Tata Chemical is looking good. Okay, it is still about the 200 MA. Banking stocks, SBI is good. Bajaj Finance, I will look to buy at very low levels, around 5,300 levels. So I'm waiting for that time to add some numbers around 5,300, 400 levels. Bajaj Financial Services, I'm not very sure about it, so I'm not going to add that. HDFC Bank, I'm going to add as it goes down, but currently also it is at good level. Here is HDFC Bank. ICICI Bank, Kotak Bank, JM Financial, I have finally exited completely out of this stock. Okay, taking a loss. पूछने जरूरत नहीं. The real estate companies, India Bull Real Estate down. I have a strong feeling, even though there are good projections and positivity shown in the market by various analysts, I still feel that overall the real estate companies may not do well because of the increase in the housing interest rates. So you can go by the tide and add or remove and keep on booking profits also. But I, for one, will not enter. Unfortunately, I'm holed up with Godrej Properties at a higher price. So I will look to exit, but at a price which will be not very bad. The consumer durable companies are going into trouble because of the demand is less. So Havells, Dixons, Voltas, Ember Electronics, Blue Star, all are in basic trouble. They all are in trouble. So avoid them. Oil India, I have exited just now, but I will once again enter at little low levels. 280 levels is here, somewhere here. This is the demand zone which is there. I will enter at the lower levels and wait for upper profits because there is a possibility of some government action on them to make some gains. Okay. Hindustan Petro and all, same kind of condition. ONGC, Coal India. Coal India is a good stock at these levels. If you want, from future point of view, I would like to exit the stock anything around 225. So, but I'm waiting for the right price because currently the market is heated up. Power shortage is there, power requirements are there. So this stock will go up to 220, 225 levels. Okay, NTPC will also move similar parallel. Tata Power will go up. It was good that we hold the Tata Power earlier. Now it is giving returns, so it will go back to the better levels. So wait for that time. Power Grid, Power Finance, they all are looking good because of the current surge which is going to be happening. ITC is a good stock. If you get at a lower levels around 260, you can add it in your portfolio. There is a demand level over here. So if you get it at this levels, it is good. Otherwise, you can, if you are having it, hold it. Varun Beverages has got a bonus, X bonus, it is down. The cement companies are down. So avoid them. If you're having them, hold them. The small cement companies like the JK Lakshmi, APCL, Heidelberg, you can look at the profit levels, and if you want, you can exit some of them as per your requirements. Some of the recent companies which I had mentioned, Coromandel International, I've just bought some 30 numbers at a lower price when the market fell. RHI Magnesia, I'm looking at a price which is low. Okay. Around the demand zone of around 520 levels. Polycab is going down, so avoid it. KEI is okay. APL, Apollo, it's a tube-based industry. Many real estate companies may not do, but the home improvements company will do well. So we stop for the day over here. Any particular stock you want, you let me know. Otherwise, we'll start the second session.